If you're an Amazon book publisher or even an Amazon seller, then this video is going to be valuable for you, because if you're looking to sell your business, cash out the money, and move on to the next thing, then you're going to want to stay tuned and watch this entire video, because as opposed to giving you a lot of information in theory, I'm going to show you how in the year 2017 I attempted to sell my Amazon book publishing business. Also, I'll tell you why the last moment I backed out of the deal and decided not to sell my business. Lastly, if you do stick around, I'm going to tell you some of the big mistakes I did and how you can avoid them. And I'll tell you why, for me, keeping the business was one of the best decisions I've ever made. Now, before I get started, be sure to hit that subscribe button and notification bell. It really helps the channel out. And if you like all things related to entrepreneurship, Amazon, book publishing, and basically anything related to that, then you're really going to enjoy this channel. And like I said, it really helps me out and it really helps my channel grow. Now, just to give you some context, I started this Amazon book publishing business back in the year 2012. I actually stumbled upon it. It was pretty much an accident. The entire time I was running this Amazon side hustle business, I was actually working a regular 9-to-5 job. So like I said, my entire focus and resources wasn't entirely in this business. Now, by the same token, I was actually planning on starting another business. Yes, I actually had really bad shiny object syndrome, but that's a discussion for another day. But overall, I really wanted to get rid of this business, get as much cash out of it as possible to basically fund that new business I wanted to start. I had time on my hands because I was making income from it, I was making profit from it, and I also had income from my regular job. So with that being said, in the year 2017, I started doing some research. I went on Google and I found a few different platforms that allowed you to sell a business, one of them being Flippa.com. In exchange for advertising your business for sale, they would take a success fee. And don't quote me on this, but at the time, I believe it was 10%. So whatever the amount, the dollar amount your business would sell for, they would take 10%. For me, it seemed like a fair trade, right? They would allow me to access their pool of investors, of buyers, and it would allow me to what I had hoped for is a quick sale of my business so I can move on and do the next thing I wanted to do. So at the time when I was doing my research, I knew there was different options for me to sell my business. There was different platforms that allowed me to sell my business, similar to Flippa.com. There was business brokers. There was events that I could attend and basically potentially pitch my e-commerce business to a bunch of investors. However, like I said in the beginning of this video, I really wanted to do a quick sale, get the cash, and move on to that second business I really had in mind, and I was really eager to get started. So I got started listing my business for sale on Flippa's website. And one of the first things it asks you to do is pretty much cross-check and validate all the financials and your identity. That way they can authenticate that this is truly you and this is truly your business. So they ask you numerous questions. I had to spend a few hours gathering all the data, such as profit and loss statements, bank statements, validating my identity, and all that good stuff. So that was one of the first steps that I had to do to basically set off and list my business on the Flippa website. So once I got done listing all the financials, having them cross-check it and validating that this business was actually mine, the next step after that was actually doing the business listing. So actually preparing a listing of your business for potential investors and buyers to see and read before they actually contact you, right? So that can be broken down in a few categories. I'm pretty sure at the time they had a template for you to fill out. And basically what it boils down to is that you have to pretty much do a SWOT analysis. So you basically have to identify the strengths, the weaknesses, the opportunities, and the threats. And if I can share you some piece of advice right when we're getting started, and again, this might all seem very obvious, but at the time when I was doing it, I didn't have this kind of information. So that's why I'm putting it out there. Hopefully it's going to help someone that's potentially in my shoes back in the day. You really want to highlight some of your business strengths and some of the opportunities. Obviously, you want to make things as good looking as possible for a potential buyer and investor. Mind you, all you're doing at that stage is you're creating a product listing and no one's investing yet. They're pretty much just reading your business listing, and then they're going to contact you, and then you can start the discussion and then ultimately negotiate, etc., right? So pretty much all you're doing is setting the stage of and putting your business up for to be exposed and critiqued by who knows how many people, right? So basically how I broke down my listing, I'm actually going to put this on the video right over here because I don't remember everything I wrote. But some of the things that I remember that I highlighted that were very favorable for me was that the business was growing, right? Not this way, this way. So it was actually growing. So this was something that I really played in my favor. And basically what I kept re-emphasizing that the business had a lot of room for growth. So I definitely put that in the opportunity side. I mentioned how there was different things that they could take advantage of once they took ownership of the business. So basically they could expand on the products, in our case books, turn them into audiobooks, translate those books, and do a bunch of other things. Some of the other things that I mentioned as a strength was that it didn't take very much time to operate this business. So the general administration was very little to nothing. In fact, I practically worked 1 to a few hours a week if I wanted to. Obviously, I was putting a lot more time into that business, but if I wanted to just keep it idle, right, not really grow this thing, then I could just spend a few hours a week and I'd be done, right? So I had those two things going in my favor. Now, some of the things I remember that really played against me and really hurt me and ultimately is what resulted in the business taking a lot longer to start getting some serious offers was the fact that my financials, while I did have 12 months, and I actually highly recommend before you even consider selling your business to have 12 months of history in your business. I had sales records since 2012, so that played as an advantage to me. But what hurt me is at the time I was growing this business and spending a considerable amount of money on developing new products. So I was getting writers to write new products. So what ended up happening is I'm actually going to share some of the numbers right here on the video. The cost of the business fluctuated drastically. So some months I would spend a ton of money on creating new books, and other months there would be no expenditures. Now, as you can see, the business sales revenue was growing, like I mentioned earlier, and the profits near the end of the months, it was also growing. Now, the fact that I had inconsistent costs and nothing seemed to be very fixed played against me. So basically, every time somebody would communicate with me, I had to explain that I was currently producing books to generate more revenue. And pretty much if the buyer or investor wasn't familiar with the business model, then you found yourself repeating yourself over and over again, which did nothing but take away from the focus and the appeal of ultimately someone buying your business. So another tip that I recommend you do is that if you're planning on selling your business, not only to have 12 months of history, if not a lot more, that way there's a lot less uncertainty and a lot less risk, but to basically plan ahead and make sure your profit and loss statements, right, your P&L is positioned in the most favorable fashion for a potential buyer and investor. So what do I mean by that? If you're in a position to allow the revenues to grow, then you want to basically show that in your month-to-month analysis of your profit and loss statements, because this is something a lot of people are going to look at, right? Is the business distressed? Is it going downwards or is it going upwards? If it's going upwards, then that's a good opportunity for them and it's a lot more appealing. Also, the costs. What you want to do is try to keep the costs low, but if you can't, what I would recommend you do is try to keep it as fixed as possible. That way a potential investor or buyer that communicates with you why these costs were elevated, then you can have a solid breakdown if everything was fixed, right? If the cost to produce XYZ was this amount and at the end of the month it all adds up, then everything is fixed. Anything that's a spike, anything that seems odd is going to create room for discussion, room to create delay, and ultimately it's going to make your business less appealing to a potential buyer or investor. So like I said, the reason why I'm sharing this advice today is that I didn't plan ahead. I was actually just spending as much money running this as my own business and trying to grow the revenues as much as possible. And I hadn't really set the stage to sell this business ahead of time. If I knew this kind of information, what I would have done is like I'm sharing with you, is I would have positioned the financials to be the most appealing possible to a potential investor or buyer. That way, when they look at the financials, the revenues look high, the costs look low, or everything looks fixed, and the profits would be sky high and everything is growing. this is how you would get the highest amount for a sale of your business. When it comes to the evaluation portion of your business, there's so much debate, right? There is so much different methods, different metrics, different formulas to evaluate how much potentially you can sell your business for. And what I can say is the following, right? You will sell your business for the amount someone is willing to pay, right? So sometimes it could be off the charts, a lot more than what these metrics recommend, or it could be a lot less, right? It really depends on how you position that business. Like I mentioned in the earlier part, in that strengths, weakness, opportunities, and threats portion, how well did you position it? How well are the financials? So is it distressed? Is it going down? Or is it actually a business that the opportunity is going high and there's actually more opportunity to grow the revenues? And all that's going to play into different factors of how much you can actually evaluate your business, which are really outside of the formulas that I'm going to talk to you about here today. In my particular case, what I did is I went out and basically took the profits, and what I did is I used that as a multiplier. So I used a profit multiplier. Now, oftentimes e-commerce businesses sell for 1, 2, 3, 4, and sometimes a lot more multiplier of profits. So let's say, for example, you've made $10,000 profit, then that multiplier, let's just say you wanted it to be a 3 times multiplier, then you would sell that business for 30 grand. Again, that's just a rule of thumb. These are good metrics to follow, but it is not the end all be all is what I'm trying to say here. In 2017, my little side hustle, here's actually the numbers that I had. Let me just pull the paper here because I had to write it down. So it was $17,851 of revenue and $14,528 of expenses, which resulted in a $3,323 profit in that 12 months, right? So that's between, I think, mid 2017 to mid 2018. This completely hurt how many people were approaching me because it showed such a little profit at the end of the year. Now, if a potential buyer investor had actually taken the time and actually read my description, then they would quickly know that I was actually just investing money in creating more books or getting more ghostwriters to create more books, and that's where the majority of the costs went. So if you too are showing a really low profit and profit margin in your business, then you're gonna have to do a really good job explaining the reasons why that is, right? Are you investing a lot of money in creating new product? Are you buying more inventory if you're selling a physical item? Are you spending a lot more money? You know, in our case was getting ghostwriters to write new books. So I had to explain all that. But again, that created drag. It created room for discussions, debates, and negotiations that didn't go my way because the numbers weren't as appealing. So again, I can't emphasize that enough. Plan ahead of time and make the profit and loss statement look as clean and simple and as growth oriented as possible, if possible. So the good news is that my business was not distressed. Even though the numbers didn't really play in my favor, it was actually growing, and a lot of the potential investors and buyers that actually took the time to look through the entire listing, read my description, read some of the notes that I had left, and basically that described how the business was actually growing. And a lot of them that did end up messaging me understood that. So what I did is that to make things a lot more appealing, I took the last 3 months worth of revenues, costs, and profits, and basically I forecasted that for the following year. And what I was doing is I was really aiming to get that 3 to 4 profit multiplier, right? So that would mean that I could potentially sell this business for $30,000 to $40,000. There's different ways that you can sell your business. In the particular structure I chose, what I was actually selling was my Amazon account along with all the assets of it. This did not include the actual incorporation, so I wasn't transferring shares to the buyer, and I wasn't giving them the cash balances or any of those assets. What they were getting was pretty much the Amazon account along with the product, so all the book portfolio. So in this instance, what they were also getting was about $10,000 to $15,000 worth of assets, because the cost to basically put these books together, get the covers, get the writers to put everything together, plus the labor, I factored that in as $10,000 to $15,000. So when everything was said and done, what I was actually gonna end up netting was a 2 to 3 times multiplier. And after a few months, again, I had committed a few mistakes, which scared a lot of investors and buyers away, especially when it came time to portraying my numbers. You know, a lot of them were trying to understand why I had evaluated at those numbers, and I had to go through this whole scenario over and over again with each and every person that contacted me, and it dragged on. I think it took about 3 to 4 months before I started getting some serious offers. Again, a lot of them were cross-checking my financials. Some of them were getting everything vetted by lawyers. So it takes some time, right? Now, other things that you can leverage to basically make your business more appealing is having different assets. So for example, what I also included in the sale of this business was an email list. I think I had almost 600 readers slash buyers on my email list that I could contact at any given time. And they basically announced that I had a new book. So this plays as my advantage. I had a brand, so basically all my books were under one roof, under one domain, so one website that basically they can head on to Amazon and all the books would be there. I wish I had my own website to sell my products off of besides on Amazon. That would have played again in my favor, like a Shopify store where I would have my library of books there. That way I can make sales off of Amazon, not necessarily just on Amazon. So all these things you want to think about. That way you can make the business more appealing. So what ended up happening in my particular case is that because this dragged on, because it took a few months, and I was still investing heavily in creating more products, and I was slowly learning more about this business, sales continued to go up. And by the same token, that's when I started getting the real serious offers. And one day I woke up and opened my email, and what I saw was that I got a serious offer. It was for $35,000. So a person offering me 35,000 US dollars, which is the equivalent of 43,000 Canadian dollars. And this was approximately what I was looking to get. In reality, I think I was looking to get 50,000. After getting this email, I was happy, but then I started having questions and doubts, right? When things become a reality, oftentimes we start feeling different emotions and we don't know if it's actually the right thing, right? In my heart, I knew I could grow this business to do bigger things. So what seemed like a good idea in the beginning started to feel like a bad idea. So a mistake I did was that I spoke to my accountant a little too late. I found out that I was going to get taxed a heck of a lot of money because of the way I structured this deal. The way that the deal was structured was pretty much a cash purchase, right? The person, the buyer, the investor would give me the money, and I would basically take that money and put it in my business bank account. Now, the problem with that, it's going to be recorded as income. So I was in a position that I was going to get taxed a big chunk of that money, which I didn't want. If you're in a position where you want to sell your business, make sure you consult with a lawyer and an accountant, and make sure you structure a deal that is tax favorable. Looking back, what I should have done, and again, I'm not a professional, I'm not an accountant, but what I should have done is put it in a holding company. Now that's a discussion for another day. Now, not only was I going to be taxed to kingdom come on this amount, but sales were growing, business was picking up, and I started to feel like this was a bad move. So I think what I ended up doing was that I didn't immediately decline the offer. I actually sent a counter offer for a huge amount, and obviously they refused, but I said to myself, why not? If I'm going to go out, let me go out with a bang, if possible. And what ended up happening is that I started to take this business a lot more seriously. After going through that whole experience, I saw that, I can really grow this thing if I just focus on it. And that's what I did. I bought a lot more trainings, I put a lot more energy into it, and I really focused. And long behold, after a year or two, I think what I had made combined in the last 6 or 7 years, I did in 1 year alone. So that just shows you, if you're gonna sell your business, you really have to not only position it to be favorable for a buyer and investor. And I know all this seems so obvious now, but it really didn't at the time, especially because I was rushing. I was really excited to start a new business. It didn't seem obvious. And the other thing is, you really have to look at in the long run, right? Do you really want to operate this business? Do you really see potential of it growing? And oftentimes, when you think you're at the peak, you're really not even at the peak, and there's so much more to squeeze. And in that last squeeze, there's so much liquid to go get. Hopefully that analogy kind of makes sense. Looking back, it was one of the best decisions I've ever made to basically to keep that business, because till now it's still making profits. All the books that I own now, in the multiple hundreds, are all paid off, and it's really a profit generating passive business, and I'm really thankful for having kept it. But I'm also thankful for having went through this experience. Just wanted to share with you a few tips, a few strategies, a few pieces of advice that I wish I had taken into consideration. And I hope you enjoyed this video. Like I said, I hope you subscribe. I'm going to be posting a lot more videos like these, really related to entrepreneurship, Amazon, book publishing. If you really want to create financial freedom for yourself, then stay tuned. I have a lot more videos coming. So I hope you enjoy this one, and I'll talk to you soon. Bye for now.